Welcome back to another video in my open vlog. It was a rough week in the equities markets, and I don't think it's going to get any better next week. I want to start with some analysis on SPY, then I'll move into IWM, AMC, Gamestop, and then do some vlogging at the end. So let's pull up the charts. SPY is an ETF, and for whatever reason, it seems to just indicate which way the markets overall are moving. So I'm going to look at it first because I think it's going to give us a lot of context into some of these other stocks I'm going to analyze as well. We are currently on an 8 count of a 9 in a downtrend. That is to say, we're looking for a bottom after at least one more close, another candle below the close of the previous. The sequence count stuff is hard to talk about. I'm not very good at it. I just pull up the indicator and I know that a 9 count marks a buy on the bottom, and there's also a 13 count. We're currently on 8 of 9, so looking for more downside. I have a target at $350, and that's because of a double gap we had here between the second and third counts and the third and fourth counts, and the higher, or I'm sorry, I should say the lower highs and the lower lows between the fourth and the fifth count here. So I am looking for more downside. That's my chart pattern analysis and sequence counter. This is going to go down, I think, more. You can see I have this yellow pattern shown, and it is a right angled and descending broadening formation. It's a corrective pattern, and to have a close below it twice, 2 days in a row, and also on the weekly candle is really bearish, very bearish. The downward target for this pattern, I haven't calculated it yet, but I will if we do see more downside moving into next week, which I think is very, very possible. Now, before I move into the indicators, the oscillators, the RSI, and the MACD, I want to look at this article on Bulkowski's website, thepatternsight.com, and address some myths. So here's Bulkowski on stock market oscillators. He goes in, talks about some background. He says, Active Trader Magazine staff wrote an article titled The Trouble with Oscillators for the August 2006 issue, and he would like to share some of those conclusions. And, well, so do I. So here we go. Really, I just want to come down to this one right here. It's a myth that oscillators lead price action. It is. It's a myth. So the authors in the article, they wrote that oscillators cannot lead the price. All indicators or mathematical calculations are derivatives of price. Every oscillator value depends on price action that has already occurred. Nothing can occur in an oscillator before it occurs in the price. And it's important to remember that because what we're looking at currently is a fantastic opportunity to see some divergences appear on the RSI and the MACD that aren't there yet, but it looks like they could be. So it's very, very tempting to say, oh yeah, we're definitely going to find the bottom. We're going to set up this bullish divergence, then we're going to go higher. That would be a divergence leading the price, but that's actually not how it works. The price needs to make that move first. So while it is true that the MACD, you can see down here, that these two levels, these averages haven't reached the lows from the previous dip, the bottom of this 13 candle run, this 13 count run. And so if the price continues lower, we're just going to see lower lows, nothing to see. But if we do have some green coming in next week and the MACD pulls up, we'll have a lower low in the price. You can see that this 13 count was higher than the end of this 9 count would be, and that the low in the MACD would be higher. You see that? Let me just put a line there. Why try to describe it? So if the MACD makes a complete 180, there's a slight uptrend to that line, and then of course the price moves down there. You can see that would be our divergence, and that would be a bullish thing, but it's not there. In fact, what I'm really looking at is how this blue and yellow line in the MACD are moving with each other, relative to each other. So there's a short and a long period here, and the short period's blue, the long period's yellow. So the blue one moves more often and more easily because its average is shorter in time, and you can see that as the two averages move closer together, the histogram also pulls up. This is an opportunity. This could be signaling that the downtrend's over. But as you can see, it can even pull up towards the shorter average, can pull up towards the longer average. And the histogram can go down, or I should say up. It just depends if you want to talk about negative or whatever. Anyway, and still continue lower and keep diving down. And there was a couple of fake outs here, right? And this isn't even close to that. We're not even seeing the short-term average moving nearer to the long-term average at all. In fact, they look like they're getting further apart, and the histogram looks like it's still pushing down further. And yeah, if we get some green price action next week, we can form that bullish divergence, and it's tempting to try to forecast that, but it's not there. It's not there, and the indicator's not going to lead the price. So it's very possible that the MACD just continues to set a new low as the price continues to dump, and we're in the middle of a stock market crash. That's really what I think is going on. That is really what I think is going on. And it's just probably going to get a little worse before it gets better. I've gone into that too in great length in other videos. And so I want to talk about the RSI now too, because just like the MACD, it looks like we could be setting up a pattern here, a swing failure, where we have a little W shape, and as the price increases, the RSI just flings itself up higher as if it formed a double bottom, because the RSI can form patterns because it's just an average of the gains and the losses, and then it's converted into a percentage to make an oscillator. So yeah, it's tempting to say we're going to be green next week. We're going to see these divergences and these RSI patterns show up, and that we're going to be bullish, and up we go, and then everything goes to the moon. It is tempting to say that, and by all accounts, there's going to be a lot of people who do say that, and I'm just going to have to disagree. I think that it is likely to see a push lower and then a pull back up to this yellow line, the lower trend line of this right angled and broadening descending formation, before a continued push lower. Yeah, I think we're going down. I think we're going down. That's all there is to it. And so it's important to keep that in mind, that this ETF, SPY, is set up to crash and not reverse. Not yet, but it could almost. It's possible by mid next week that we have a bottom come in, but it's just simply not on the charts yet. It's not there. Not yet. Not yet. So I'm not getting my hopes up. In fact, what I see is a bearish breakout of a corrective pattern, which would signal a big dump is coming. Moving into IWM, this ETF covers the Russell 2000 index. I'm not sure how it's weighted. Similar to SPY, it's on the eighth count of a 9-count sequence. And this candle, it's different than SPY's because first, there's no gap. Well, okay, there is a gap, but it filled. That is to say that the price moved into the range that it gapped, but it's also not below the prior body's candle. So this looks better. This looks more like a reversal than SPY, to me personally. You can see the RSI ticked up a little more than SPY did, but this still doesn't mean that the price won't drop further. The volume is above the 30-period average again, and in fact, we might be in a rising volume trend as we're in the middle of a sell-off. So it could be that we're having strength in selling appear, which is very possible. The MACD, it's doing the same thing where that short average just seems to be plummeting, and this longer average is chasing after it, and it's not closing the gap. The histograms are getting more and more bearish. This looks like it's ready to dump too. It really does. The RSI hasn't reached oversold in a while. If the price can make a turn here, there might be some bullish divergence there. But again, the price has to make the move first. So I'm not going to be forecasting that. It looks like there's still a ways to go down. Either we get a bottom next week and we pull up, or we just fall. I really just don't understand why we'd see a turnaround at this point. It is possible that we get a corrective uptrend for a while. It's always important to acknowledge that, but really I'm just looking for a big dump. I was looking at some economic data. We don't have anything coming out until, I don't know, June 29th or July 6th or the 13th. Maybe you can see that if I duck. Got some dates up there that I'm watching. So SPY looks like it's ready to go down. IWM looks like it's ready to go down. And there is an opportunity to set bullish divergences in the oscillators if the price can turn around, but it's got to happen first, and it's just not looking likely because we haven't finished the sequence count yet. And even if we finish a sequence count, that's not a guarantee that the price is about to turn anyway. I'm going to open up AMC now because this is all going to come into AMC. The broad market movement is currently weighing on the meme stocks a lot. So I've been following a downtrend in AMC from 34, and we're currently in this broadening ascending wedge. Now, I was thinking that today was going to be a big move. I thought it'd be a move down. It wasn't. It was up. That's fine. That was the perfect opportunity for me to burn a little cash I had left in my account and quit day trading because it's a habit. It's like an addiction, and the effect it has on my mental health is not great. Let me make this very clear. I am not down on the markets. I not only got my initial investment back last year, I made profits, and from those profits, I paid myself. So I've enriched my life with new toys, a lot of stuff actually. And then I took some of those profits and I just spent them playing in the stock market. And that's gotta stop. And the only way I could figure out how to stop myself was to just run it into the ground and one last act of will, just burn myself and say, okay, that was it. Never again. It's like pouring alcohol down the drain. You just got to get rid of it if it's a problem. And for me, it is. So maybe some public awareness of that is important. I think that there might be brokers out there who are using social media to generate trading activity amongst retail traders to profit from payment for order flow. And if you don't know what that is, go ahead and look it up. I'm not going to explain it. But I think that there might be a real problem, and it may take a while before awareness really starts to gain some speed because, well, first, people need to be honest about it. It's hard to be honest about it. It is, because it's like, I have a problem. I day trade a lot. It's like, it's not really a problem because aren't I up in the market? Yes, I am up in the market, but that's not the point. All those gains, all that does is keep me in the market, you know? And yeah, I get myself new stuff every now and then, but again, it's the effect on my mental health that it has, and that's why I need to stop. And people don't want to admit that. No one wants to admit that, but there's a lot of people like me. And there's a lot of people like me who didn't make money. There's more people who probably haven't made money who have the trading addiction than who have the trading addiction and have made money. So I want to take a moment and just explain all of that. And I know this video is getting long, but I also recommitted myself today to not only quit day trading, but to really return to the sense of vlogging, I don't know, that I started the channel with. This is about me vlogging and me sharing myself, and it's hard for me to open up and be vulnerable and share those sorts of things when I have so many negative commenters all the time. Like, some of these comments I see are either completely wrong or are just meant to aggravate me, and it's obvious. And so that does impact me. That inhibits my desire to want to be open and authentic, and that challenges the integrity of the nature of the channel, which is a vlog. And I have to either just accept that it's going to be there, or not worry about looking weak for banning people. If you come into my channel and you're just disrespectful in the comments, I'm just going to start banning you. Deal with it. So here we are in AMC. We did have a green day today, and that did start a 1, okay, on the sequence counter, which could be bullish. It really could be bullish, and the price could break out. And if we do break out, I am looking to run into an uptrend that's probably somewhere up in the low 20s currently. I'm not going to go chasing after at the moment. If we get a breakout above this downtrend, then I will do that. But I'm not going to flip back bullish on AMC until we get above this downtrend. Until then, it looks like we're just in a big symmetrical triangle. And I had one charted earlier, but it just seems to have grown. So we're in this consolidation phase here. There is an accumulation zone between these two blue lines, and the price has made big moves out of it, but this last move was the weakest, and the price is now getting more comfortable within that region. That tells me that buying pressure is dying in that area. The RSI is doing something really curious. I saw this uptrend from that low we saw, what day was that? May 12th? And then this bottom too, and it forms this symmetrical triangle in the RSI, and it's like, you're kidding. That's so weird. That must mean that the average gains and average losses in AMC are like even as get out. Very, very, very even. I was expecting the price to close near 13 this week, and that was because of the options chain. We actually closed at 12.53, which is pretty close. Moving into next week, what I'm looking for is a push either down and out of this pattern or up and out of this downtrend. I really don't think that the price is going to move sideways all week long in this tiny trading range. It's going to make a bombastic move one way or the other. And remember, SPY is set to dump. So that, I think, is probably what's going to happen. Look at volume. AMC moves bullishly on high volume, and volume is not increasing. The 30-period average actually is pretty flat currently. It might be ticking up a little bit, but moving into the future, unless we get some big volume days like we had back here in late May, then this volume trend will decrease, and that will be a bearish indicator as well. Looking at AMC's MACD, MACD, you can see that these averages are pretty close together, the long and the short term, and they are getting close to neutral up here at 0, but that long term is starting to push up against the short term, and the short term is not pulling away very strongly. That distance is getting close. The MACD is not super reliable after you have really big moves. Like this push up to 34 really threw the MACD for a loop because the averages just go completely out of whack. And so to have the RSI now making this consolidation pattern and the price also making consolidation pattern, it looks like the MACD might be where it's supposed to be, and that is on the bearish side of things with decreasing buying power here. You can see that the histogram is trending down. So that looks like bearishness in the future to me as well. It does. That's what the analysis says. And if you think that all the failure to deliver means something, then you don't know what the DTCC's failure to deliver warehouses are. Yeah, the DTCC offers a service where parties can take their X-clearing fails and they just warehouse them. And Dr. Suzanne Trimbath talks about that in her book Naked Short and Greedy, and she talks about naked short selling and how it happens in the markets and how they get away with it. That is market makers. You can also go onto the SEC's website and search for resetting the clock. That's a method of options chain abuse where market makers and hedge funds, and some market makers can own hedge funds, and they can help each other appear to cover shorts and never really cover. I should say close, but also cover. They're different, but it doesn't matter. So I'm thinking that AMC is probably going down, and if it rips higher, that's great. Yeah, it's probably a good time. I still have shares of things like AMC and GME in computer share as book entry shares. And the reason why I did that in computer share is because they have their own internal broker. So those shares, those orders for those shares go directly into the stock markets, directly into the New York Stock Exchange. There's no payment for order flow from computer share. You do pay a fee because guess what? You're actually buying shares, so to speak. They're book entry shares. Now, you would still have to take them out of street name and put them into your own name to really make them your shares, or you could certificate them. And so I actually have a share of Gamestop certificated just to make it completely liquid. And I did that during my MOAS hype days, but you know, I'm happy with it. I have shares of AMC and GameStop and computer share, and actually in this brokerage account, I have shares of Sundial, SNDL, also Puration Inc., PURA, and I can't remember the name, but the symbol is AKLM. And Puration Inc. and AKLM, they're part of a conglomerate of hemp companies. Essentially, they're going to try to get the hemp industry moving once cannabis is legalized nationally. And I really like those companies. I really do. I don't know if they're shell corporations for like money laundering. Who knows? But I like the idea and the concept, and I kind of like the idea of trading penny stock too, because they're not optionable. There's no options chain, and they're over-the-counter trades. So what market maker is going to be abusing those kinds of markets? I mean, I'm sure they do. There's got to be some form of that, but to the best of my knowledge, that'd be a good way for me to get out of crowded positions and actually try to do some investing. And I'll give myself a little budget. It's just fun having like 11,000 shares of a company, you know. And you never know if I can get into penny stocks, into emerging renewable resource or renewable economy companies, and they take off, that could be immensely profitable too. Because I really do believe that we're seeing the end of a very long consumer cycle, and we're going to go into a sustainability cycle. And I think that Kathy Woods is on to something. I really, really do. As cryptocurrency drops, and as, you know, the meme stocks get trashed too, I really do think that this is all just part of a natural process to weed out the losers. Okay, so anyway, GameStop. Let's talk about GameStop for a second here. I'm not worrying about the time, and that's because I don't really care anymore about how long people are watching. This is a vlog, so I want to vlog this. I mean, the MACD here is bullish. It's in the bullish side of the oscillator, right? That is to say that it's above zero. The histogram is falling off the face of the planet. Now, we do have a little strong pull away from the longer average. The shorter average, say, it's pulling away from the longer average, and that's cool, but it looks like it might be short-lived. Volume's low. I mean, volume's always relatively low, right? And we have a similar trend in the RSI here as AMC. We're in an uptrend, but it did break down. It's trying to pull back up. I called a partial rise here in this ascending broadening wedge and was expecting a downward breakout. The market's pulled up and we got a 1 sequence count here, also on Gamestop, which is cool. Now, I did say we need to pull above 130 to start talking bullishly, and that might actually be in order here for GameStop. It's very tough to say, very hard to say. There is a pattern here. You can see this big push higher and then these matching lows with this intermediate peak. This looks like something. I don't know what it is. It's probably a diamond, though. It's probably a diamond. Diamonds aren't totally uncommon. And they always look really bad. Like, they're never perfect. And that'd be a great diamond right there. I'm thinking that this diamond is really big, and it's much bigger than the 2-day push that led to it. So it's probably not a diamond. It might be a topping pattern, I want to say, because we have a higher high. But then if we do have a reversal next week, which I think is likely, then we'll have a lower high. We'll have this roof pattern almost. This is really hard to read. GameStop's a really hard chart to read. I think the best takeaway here is that we're still below this prevailing downtrend and still within a corrective pattern while the markets are about to turn down. And that's why I wanted to do SPY and IWM first, is because to get an idea of what the general markets are doing can be very, very helpful. I mean, you can also see that there's a 13 sequence count running through here. that hasn't played out yet. 7, 8, 9, 10. So yeah, still a ways to go. So those are the big four: AMC, GameStop, IWM, SPY. In the future, I'm going to be not day trading. So that's going to free up some time for me to do research, look at new companies, try to find some actual companies to invest in, learn their balance sheets, understand what's going on. I think that going into penny stocks could be really good in this stock market crash. That's what I'm calling it, because I think that's what we're doing. And that's really all I want to say. I think I got everything in there. I'm going to be working on the Discord a little bit, and after I talk to Obi-Wan Kenobi, we're going to talk about his proprietary indicator, the Mewtwo indicator. It's awesome. It's fantastic. Like, Obi-Wan Kenobi is going to make so much money. Anyway, here we go. That was all. Happy trading.